Why you should have an LLC for your online business. Is forming an LLC for your internet business worth the cost? Find out in this video and learn some benefits of having this legal structure for your company, as well as disadvantages you need to consider before deciding. Keep in mind, you don't need to have a formal business entity to start and run an online business, but forming an LLC or any similar corporate structure can give you some important advantages. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? I'm doing fantastic if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about why you should have an LLC for your online business. Now, LLC stands for Limited Liability Company. Now, what are the benefits of limited liability? If you personally own your online business as a sole proprietorship, you and your business are viewed as one and the same. Consequently, you have unlimited personal liability for all the debts and other legal liabilities of your business. In other words, you can be attacked, people can sue you, people can sue your personal assets, right? So your personal assets such as your home or a personal bank account or yachts or boats or whatever, those could be at risk to satisfy unpaid debts, legal judgments, and other legal obligations of your business. The same holds true if your online business has several owners who operate as partners, right? If they operate as partners in a general partnership. Now, on the other hand, an LLC provides its owners with limited liability. So limited liability means that you as an LLC owner, for example, are not personally responsible for paying LLC business debts that you haven't personally guaranteed. That's the key word here, guaranteed. So if you have personally guaranteed some loans in the normal course of business, you can be attacked. You can be legally sued. But as long as you haven't provided some kind of guarantee to a lender, some kind of personal guarantee to the lender, you're fine. Only the LLC's money and assets can be taken to pay for such liabilities. Now, lenders cannot touch your personal funds or property like your home. The limited liability from debts provided by LLCs typically applies only to routine bills for supplies and small items of equipment. Now, chances are, and courts have maintained this in the last few years, you will likely remain personally liable for larger debts such as business loans. This is because creditors usually require owners of small LLCs without a record of good credit to personally guarantee business loans. So as long as you personally guarantee it, yes, you can be, creditors will come after your personal asset. A landlord, in several cases in the United States, also they may require you to co-sign a business lease for your LLC, right? Now, LLCs can sort of insulate you from personal liabilities for injuries suffered by people who are injured by your LLC's business activities, right? So let's say, for example, if an employee injures someone while on the job, you can be covered by your LLC, especially if you have some kind of insurance. Now, if your online business is co-owned by 2, 3, 4 or more people, forming an LLC in this case will also insulate you from liability for wrongdoing by your co-owners, which is really important, folks, right? You don't want to carry you don't want to pay the price on something that another person, another co-owner has done. So it is critical to understand that even if you form an LLC, you remain personally responsible for your own wrongdoing, such as if you commit fraud or you injure someone through your own negligence, the court will not find you not guilty, right? So when you have an LLC, it is also critical to have adequate liability insurance. Now let's talk about taxes here. LLCs are very flexible for taxes. Now, an LLC ordinarily does not pay any tax itself. Rather, any profits or losses that the company, the LLC, earns are passed through the LLC to the owner's individual tax returns, right? This is the reasons why in the industry, LLCs are called pass-through entities. right? So LLCs owned by a single person are usually taxed the same as a sole proprietorship, right? And this is called a single member LLCs. Now the IRS has a sort of some kind of funny name for those LLCs. The agency calls them disregarded entities. So single member LLCs are also called in IRS jargon disregarded entities. Now you have to file IRS the Schedule C profit or loss from business on your Form 1040 with your tax return, of course, listing your business income and deductible expenses. So you pay income tax at your individual tax rates or on any profit your business earns. Now, this is actually, and a lot of experts have said this, the simplest tax return you can have when you run a business. Right. So if you hire, say, a tax preparer, an enrolled agent, a CPA to do your taxes, you'll pay much less than if you form a corporation. LLCs with multiple members are ordinarily taxed the same as a partnership. In other words, each LLC member reports on his or her individual tax return. Here I'm talking about the Form 1040. The members share the partnership's net profit or losses and pays taxes on any profit at individual rates. So if you are in the 30% tax bracket and another co-owner is in the 25% tax bracket and you guys share the same percentage of profit, the person who is in the lower tax bracket will pay less taxes. It just makes sense, right? Now, remember that the LLC owners, you can file. Now, there is an important element here. I've said that an LLC is actually a pass-through entity, which means that you're not paying taxes at the company level, but you're paying taxes on the personal level. Having said that, you still need, if you have an LLC, you still need to file something called Form 1065, U.S. Return of Partnership Income. And this form will inform the IRS about the LLC's income and deductions for the year. Now, this is just the taxman's ability to reconcile whatever the company is reporting versus what the partners, the co-owners are reporting. So the IRS can see if there's any discrepancies, somebody's just lying on their tax returns and so on and so forth. This is just, so the Form 1065 that the LLC is filing is not, it doesn't have any tax paying or tax filing ability. It's just more FYI for the authorities to know what's going on. Now, LLC owners have also the option of choosing to be taxed as a regular C corporation or an S corporation. And you can do so, if that's what you want, by filing something called Form 8832, Entity Classification Election. And you can check the corporate tax treatment box on the form. Now, choosing C or S Corp taxation sometimes can save LLC owners taxes. We'll have an entire show about those, that sort of adjustment. If you guys are interested, put in the comment section and we'll be very happy to do that. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still talking here about why you should have an LLC for your online business. If you love the clarity and the quality of the show so far, or the content so far, please consider subscribing to our channel and turn on the notification bell so you can be informed in real time whenever we drop a new show. And we do this every single day, rain or shine. Now, I want to talk to you about, if you love the content, please comment below, share, and like. Really appreciate that. Now, LLCs are very easy to start and run. This is one of the reasons why I encourage you. Again, let me just quickly sort of cover my back here. We're not providing any kind of legal advice. This is the result of research by our team, and we are giving you the result of our team. We are providing general information for your personal company, for your personal situation. It is always better to enlist the help of a professional, of an attorney. All right. So, having said that, let's just talk about LLCs and the fact that they're very easy to start and run. You file articles of incorporation, articles of organization rather, or a similar document with the appropriate state office. Usually it's the Secretary of State. Now, the cost in most states is around $100. If your LLC happens to have 2 or more members, I encourage you, and experts rather, encourage business owners to create something called an LLC operating agreement. Now, the cost for this varies depending on whether you want to create a custom agreement or you want to use a standardized form. Depending on where your LLC is located, you may also need to obtain other local and state business licenses for which a fee must be paid. Now, LLCs have fantastic flexibilities in how they're managed. They can be run by their members, or they can be managed by a management group, which in this case can consist of members and non-members. Small LLCs are normally member managed, and they have fewer corporate record keeping responsibilities than corporation, right? So, but with the corporation, you must hold and record regular and special shareholder meetings to transact important corporate business. And even if you're the only corporate owner, you need to document your decisions. And this is not required for LLCs, for example. Another thing that is essential to notice here is that an LLC qualifies for the 20% pass-through deduction. I explained earlier what a pass-through entity is, but if you form an LLC to run an online business, it will qualify for the 20% pass-through deduction. Now, this deduction, which is in effect from 2018 through 2025, the 7 years, allows owners of pass-through business entities to deduct for income tax purposes up to 20% of the net income their businesses earn, right? So as pass-through entities, LLCs can qualify for that. So if you earn, let's say if you earn a profit from your online business, you'll get the deduction. For example, if your net income from your online LLC business is $100,000, you may deduct up to 20 grand from your income taxes. However, if taxable income exceeds an annual threshold, the deduction is limited to 50% of the amount paid to employees of the entity, or 25% of employee payments plus 2.5% of the value of depreciable business property. Now, we have an entire show in preparation for the business deduction, the qualified business deduction, and we'll just go a little deeper in that show. Suffice it to say that the deduction I'm talking about here may not be taken by shareholders or C corporation. So that's one great reason why you should organize your online business as an LLC, not as a C corp. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? We are still having a conversation here around why you should have an LLC for your online business. Now, let me talk a little bit about. I have spoken about the pros of the LLC. You know, the fact that they're very flexible, they're easy to run. Let's talk about the cons. Let's talk about some of the disadvantages that you might run into if you have an LLC. Now, you have extra state taxes and fees. So if you form an LLC, this could cost you a bit more than running your online business as a sole proprietorship or a partnership. In most states, these costs are not substantial. You must decide whether this extra costs are worth the benefits provided by the LLC, the benefits I spoke about earlier. Many states impose annual fees on LLCs that you don't have to pay when you are a sole proprietor. This may be called a franchise tax, an annual registration fee, or a renewal fee. In most states, the fee is about $100. Now, the thing here is that we have some kind of outlier in the union. California levies a hefty $800 minimum franchise tax per year from LLCs. $800. So the last thing you want to think about if you want to incorporate in California, think twice. A few states also impose special income taxes on LLCs. This is in addition to the income tax the LLC owners pay. Again, we're here talking about California. I love California. You know, I have family there. I live there. So California levies a tax on LLCs that make more than $250,000 a year. So the tax ranges from about 900 to 11,000. That's a lot of money. So for more information, you want to double check. You have to check the websites of your state Secretary of State, the Department of Corporation, or Department of Revenue or Tax to have more info about what's going on fiscally speaking, where you live in terms of filing, in terms of having an LLC. All right, folks, this was it for today. This was a short recap of why you should have an LLC for your online business, and I spoke about the benefits of limited liability, the fact that LLCs are flexible for taxes, that they are easy to start and run, and that they qualify for the 20% pass-through deduction. And I also finally spoke about the disadvantages of the LLCs in terms of extra state taxes and fees. All right, I will see you next time. But until then, remember, stay marvelous.